the perps are such a good instrument that, people wanted to use, people started using FTX for it and they all lost their money. And the biggest issue we saw is that it's controlled by like a few centralized exchanges, right? And the best thing is that you can make perps for any illiquid market, right? And for crypto, it has a product market fit. You see people trading trillions, like in the peak of bull market, like 2 trillion of perps was traded per month last year or something, year or two in fact. So we wanted to make that same thing happen on a decentralized exchange, and we wanted to do our part to do that, right?
Hey everyone, welcome to the Edge Podcast. I'm DeFi Dad, and I'm here with my friend and co-host from 4RC Nomadic. Today's show features an emerging giant in the world of decentralized perps trading, Polynomial Protocol. This spring, Polynomial launched its decentralized perps exchange with up to 25x leverage on top of Optimism, using Synthetix as its source of liquidity. Since then, Polynomial has seen enormous growth to become one of the top Synthetix Perps trading front ends, if not number one any given day. In this episode, we'll dig into what's attracting so much trading liquidity to Polynomial and how they plan to sustain their growth as a DeFi derivatives powerhouse. But before we do, just a quick word from our sponsors who make the Edge Podcast possible. Whether you're a trader, farmer, analyst, or newbie, you can trade smart with KYBERSWAP, the OG decentralized exchange and aggregator on 13 chains. Swap at the best rates, farm with real yields, set limit orders, use their proprietary trading and AI tools with the best UX in DeFi, securely and permissionlessly. Get better rates, better opportunities, better alpha, and a better trading experience. Trade smart now at KYBERSWAP.com.
Hey everyone, my name is Kaito. I'm a co-founder at UTOPIA Labs, and today we're really excited to be announcing and launching a feature called USDC bank transfers. We're basically allowing for any company based anywhere in the world to be able to send USDC to any US bank account, whether that US bank account is a US citizen or a person who might have something as simple as a Wise account. If we zoom out since a year ago, there's been a chokehold on kind of the interoperability and seamlessness between traditional rails and crypto rails. We put a lot of time and effort into this to be able to provide a smooth end experience for you as a consumer or as a company using crypto and using traditional financial rails.
It all started so simply with CryptoKitties and Maker on Ethereum, but quickly became complex with more applications and many chains. Today, everyone agrees UX issues are the biggest blocker standing in the way of crypto adoption. Introducing AVOCADO. Multi-chain UX redesigned from the ground up. The first wallet to abstract networks, accounts, and gas. One gas tank to pay transaction fees on all chains in USDC. And native access to INSTADAPP's powerful, custom DeFi strategies. AVOCADO, one wallet to rule all chains.
All right, let's introduce Gautham, the co-founder of Polynomial Protocol. Gautham, welcome to the Edge Podcast. How are you doing?
Yeah, hey guys, I'm doing very well. I'm Gautham. I'm one of the people behind Polynomial. So Polynomial is a DeFi Perps exchange. So we let people trade Perps. We have around 45 plus markets, and we have one of the lowest fees on chain from 2 to 6 TPS with like up to 50x leverage, which makes it like a very interesting venue for anyone who wants to trade Perps, hedge their portfolio, or any of the other thing.
It's funny, I did not realize you were up to 45 markets now, but it's grown so much since the launch of Polynomial. So why don't we start with the usual background? Can you share anything more about just some of the other DeFi that you had worked on, or maybe that you had been involved in before you started building Polynomial?
Yeah, Polynomial started like 2 years ago. We went to a global hackathon, and we just looked at the entire DeFi space, and we realized like there is a lack of derivatives on chain. And if you look at any traditional finance, you see that derivatives are one of the biggest sectors that exist. So at that time, we started by building our own options exchange, which we realized it's very hard to do. And then slowly we built a product around it. And the first product we launched was an option vault, which is basically you are selling call or put options weekly. So it was a very interesting idea at that time. The issues with that is mostly that options as a derivative instrument wasn't getting any more adoption. And we just realized to scale this, options, the instrument has to gain a much more bigger market share. And if you look at it, there have been like many players who were earlier on the option game, like people like Open, who realized like options as it is from traditional finance might not work on chain. And one of the things that we did on a DOV or an option vault is that we made like an expiry-less option. So we think that instruments without expiry are the ones that are going to lead the derivatives, at least in the long-term future, because crypto is so volatile, you cannot predict even a week. And we just realized that an instrument that can perfectly capture that is Perps. And if you look at like, if you like, take all the instruments and like rank them on a scale, like we give like a spot market, like a 1-point score. And if you take traditional futures or options, it's like a 2-point. Perps are like maybe like 3 points, because if you trade like perps, you can get much higher leverage. Like you get like leverage up to 50x, and in traditional futures, you can't get that much price. And the price also deviates in traditional futures. Here it doesn't happen. So for a person generally using options is mostly for trading like 15 to 20x leverage when they want to like trade on. Here, perps can give that. So we think that in a gradual shift of the market, people would generally prefer using perps because it's first of all much simpler as an instrument. Like you don't need to know all the math and all the things behind it, which takes an incredibly amount of time to get used to. And from the market participants, what they have seen is a lot of the people who are trading options are mostly like market makers and complex people, and the other side is retail, who's mostly losing money. And so we wanted to make like a much simpler instrument, which actually is very popular in crypto at the moment, right? And the biggest issue we saw is that it's controlled by like a few centralized exchanges, right? And the perps are such a good instrument that, people wanted to use, people started using FTX for it, and they all lost their money. And, that's kind of what happened, right? And the best thing is that you can make perps for any illiquid market, right? Like you have an illiquid market, like let's say we have illiquid markets like Floki or all those kind of assets, which are like not even like very low liquidity, right? But you can make perps for it. You cannot do that in some instruments like normal futures or options. So as a derivative, like when we started the company, we wanted to build something which makes the crypto like much better, because with having a very good stable derivative market, crypto price will be less volatile and more widely adopted and things like that, because more people would be hedging and it would become a much better thing. So it kind of like a very large thought process which lasted for a very long time, and we decided that what we need to tackle is that the perps are a very good product, and for crypto it has a product market fit. You see people trading trillions, like in the peak of bull market, like 2 trillion of perps was traded per month last year or something, year or two. So we wanted to make that same thing happen on a decentralized exchange, and we wanted to do our part to do that, right? Like what can we build around it? And that question and the thought process around it made us think about like how to make a good perps, and we made polynomial trade because of that. And currently, like we have a wide range of assets, and we think that having a large variety of assets is the main game plan for us, at least, because we have around 45 markets, and some of those assets we have is not even possible on a centralized exchange. For example, we have stake deed. You can trade stake deed on Polynomial, you cannot trade it anywhere else. So having like these wide variety of crypto assets will bring all these like, or we have like USDT. So some people who want to use it, but it's like, so what will happen is when some event maybe something happens in crypto, people will just move their funds and start using it. And we think they will keep on using our platform because it gives the best user experience on all those kind of things, which they really want. And we are like slowly striving towards it without compromising decentralization.
Gautham, you started to talk through the most important product, I think the most popular product on Polynomial, because I guess if you go to the website, like Polynomial, like your like mantra or logan there is the DeFi derivatives powerhouse. So I think a lot of us now know it as the top DApp, or one of the top 2 places to be trading Synthetix Perps. But you do have these other products like Polynomial Earn. Can you just give us the quick rundown of all of the different products that are now offered? We mentioned Perps already. Are those options vaults or the Polynomial Earn vaults, are those going to stick around? Like, do you anticipate launching more of those? And then if you can talk about the other newer product called Strategies?
So the truth is we shut down on all. It's been like 3 months, and we killed it because we don't see that much adoption happening for options. So we wanted to focus on perps, and it's more like, do you want to do one thing like really, really well, or do you want to do a bunch of stuff? So we were like, okay, let's just focus on the thing that is working, and the perps have been performing really, really well. Like, for example, we had an all-time high of like 350 million per day, and we just launched like 4 months ago, 4 or 5 months ago. We launched on one day before the April Fool's Day. So, and yeah, so essentially, it's been an interesting thing because we have grown to like around 2 billion in volume. And so we sometimes like we hit the, like in the Perps AMM space, we are the one with the highest amount of volume. And sometimes like we are in the top 3 at least most of the days. And so then other than that, like one thing we have seen is we wanted to make a decision on like how we build the product. And the way we decided is like we'll focus on like larger size users, like whales in general, because DeFi Perps, like even though like L2s are there and the gas is low and all that stuff, the price for like trading Perps needs to be, at least on the gas side, should be like much lower. So it's very ideal for a person who is trading like $5,000 and above. And if you're like trading less, it's most of the time like, people prefer using a centralized exchange. But if you're trading like 5K above, like we provide like one of the best places. Like if you are like trading against the market, sometimes you even make money on Polynomial because the liquidity pool is trying to give away the risk, and like you're taking it, but the pool is like giving you extra money to just take a counter trade against the market. So which makes it like really interesting that we see like, $1 million trades and whales happening every few hours or so, things like that, when something like that happens. So that dynamics has been improving. And so to focus more on the power users, what we did is we built a bunch of things. One of the things that we did was we added like things like multiple authority, which is like, you have, people generally have like 2 or 3 devices, right? Like you have a mobile, you have your hardware wallet and all that thing. So one of the fundamental things we decided in the beginning was like Polynomial is going to be a smart contract wallet. So we like no more approvals, nothing like that. So when people first deposit money into the smart contract wallet, so they can just send it from anywhere, right? We can send it from a centralized exchange, you can send it from anywhere, you can deposit also. And then the money goes into the smart contract wallet, and then all the trading happens. So we are able to do a much more cleaner way of doing it. Like multiple transactions are bashed into a single thing, and which allows us to do things like, trade with the other stable coins. And also like, we have this authority thing where like you can trade from your mobile and your desktop and all these things at the same time. Or if you want to make a bunch of friends and like trade together, you can do that also. And yeah, so we wanted to like focus a lot on the power users. And one of the things that we have seen is the current mechanism of how the perps work is that we use the Synthetix liquidity providers, and what happens is the LPs want to remain neutral, and how that happens is by modifying the funding rate. And when you modify the funding rate, essentially is that the funding rate over here is based on something called funding velocity. So in a simpler term, what you can say is if the funding rate is positive and the market is like more people are like positive bullish about the funding rate will slowly increase. So what will happen is the LPs will have some exposure. So what happens over there is as I said before, if you come and short over that time, you'll get like some money and you'll just collect the funding rate. So a lot of people were making this delta neutral position on like DYDX or Binance, and then like by shorting on, let's say, ETH market, like funding rate, shorting ETH on Polynomial and going there and hedging that position. And it used to give like good APY, like, people were earning like 30% this to 98 bits on your profile, right? And after we noticed that this was a very big behavior happening with whales, we realized, okay, let's make this easy for people. And so we made this thing called Strategies, where like, people can like have a delta neutral position with each, just enter the capital, just enter the leverage you want, and then just you have a position, right? If you do it manually, it's like 8 clicks. So we just made it like a single click. That's the only thing that we did over there. So it's more like, how do we make the experience for the pro users much, much better? And that has been the core driver of the volume for us, like in the past few months at least. And we wanted to focus more on that and make the experience as smooth as like a centralized exchange, and like, maybe like much, much better, because at least from my side, like the goal is to be better than them and like not just like researching. So that is also like a core factor.
Gautham, it's funny, you actually answered most of what my next question was going to be about there. And in your answer, there's like a ton of stuff to unpack, but a few of the things that really stood out to me, like a lot of the issues you're tackling seem to be on like the UI UX side and making the user experience like paramount. But I still want to ask my question because like I'm curious other things you're doing to maybe create like a competitive advantage against some of the other people in the perp trading landscape. And you mentioned some of them like DYDX, GMX, Gtrade. I guess, what are you doing to like differentiate and draw in users that they aren't? And kind of like what sets Polynomial apart from some of these other like competitors, if you want to call them?
So if you compare with like DYDX or like someone like us, the difference over there is DYDX is kind of like trying to replicate what Binance is doing. And so what that means is that they have their own chain or they have their own L2 and they do an order book, right? And an order book's efficiency is very much proportional to how when you can have market makers and how many market makers you have, because that will define how much slippage you have and all those things, right? And currently, like market makers are very bad. So if you go to like very long tail assets, like slippage and liquidity would be like really bad, right? And the advantage of like an AMM based perp like us is that when you make like a very, very large trade, regardless of the size, whatever is the price that they're actually saying and like, whatever is like a small slippage factor, that is the price that you would get. So you can make like a $10 million trade, or you can make like a $15 million, $20 million trade and with like a single button. But if you try to do it in an order book, it would like take as much time as you want, because if you just do a market order, you're pretty much screwed, right? So, but it based on the depth of it, right? So it's more like how two opposing thoughts are there, because order books are like very, very well understood, right? So it brings in a lot of market makers. So it depends on like how you want to think about it, right? So we have seen this earlier in the Uniswap, also like a lot of people try to make like an order book for exchanges, but like it didn't work out. But like nowadays L2s are there and a lot of people are trying it, saying that it might work. But we think like, people use products like Uniswap because it inherently gives something better than like a normal order book. Similarly, like we think that having an AMM based per index would be much better in the longer term in terms of innovation, right? Like you can make more complicated things, you can have permissionless markets, right? Like if somebody spins up a Mario, like anyone can just say, like, let me just lit the perps for that. You can have a lot more things without going into third parties and doing those things. So we think that is the main game plan on the AMM based perp side. So for us, at least, like the main thing is like the LPs, like or on Polynomial, the LPs are like Synthetix takers, and the LPs remain neutral. And how they remain neutral is basically due to two mechanisms. One is the funding velocity. Basically, they just modify the funding rate so that the risk is offloaded. And one more thing is the slippage, right? Like sometimes, like if you're trading against the market, you get like positive slippage even. So like if you can go, there is a small tab in the Polynomial Protocol markets, and you can just see like, you get like a discount or a premium. So based on the direction you take, you can do things like that. And for our side, like we have been mostly focused on the UX side, right? Like we wanted to let the Synthetix people handle the perps mechanism and all those things. So for us, the main focus has been how can we make the user experience as good as possible. And we started with like smart contract wallet, because that like helps us like, do much more stuff, right? For example, I talked about the strategies. So in the strategies, we are interacting with both Aave and Polynomial at the same time, and you just happen to do it with like one click. We can do those connection-based things like without affecting the main contract or like, changing the user funds. It's just like saying like, okay, instead of using this protocol, just, we write a new contract and say like, go to that, go and use that thing. So it's very stateless, and it's a very, very good way of like adding and integrating products. So that has given us an advantage on like speed, on integrating and building new features. So that has been like one of the main core drivers of like what we do. We have like in terms of feature parity and things like that, we are like leading on the Synthetix Perps side at least. Like we have like much like actually many more features and things like that around that. So that has also been like advantages. And there are things like limit orders, which we do, right? And what we did earlier was like, we used to use like a Chainlink Oracle for sending it, which is like similar to how other perps and the system over here. And we realized like, okay, this thing sucks because we were using Chainlink and it used to like be delayed because Chainlink in worst case takes like a few minutes to update. By that time, you get liquidity, right? Like nobody wants to do that. And we launched it and we were like, very cool. 2 weeks into it, and we were like, okay, not a lot of people are using it. And then we just talked to the users and we just realized, okay, this thing is pretty crap, right? And what we did was like, okay, let's move to fast and low latency Oracle. So we use a pipe one, which is the same one, our Synthetix Perps are using. And we just like shipped it out in like 2-3 weeks. And like, that, and like, in terms of like, the main advantage for us at the moment is that we have been shipping things like constantly, and that has been like, it will like constantly evolve over time. And being the funds being in a smart contract wallet being that like, we, like the user, like, remains isolated from the, so that also is like a moat on us, or right? Like there is a whole account exception kind of vibe also happening in crypto. So that is kind of true though. Like I am a strong proponent of like, every app should make their own like wallet or something like that. So that like you get rid of all this crap, like approve and all, it's like a very, very bad idea. Like, just get rid of all those kind of stuff and like make the user experience simpler.
Yeah, I would say you're on a fairly short list of kind of front-facing user apps that are utilizing account abstraction already with the smart contract wallets. And I think it makes a lot of sense for the setup that you're doing.
Polynomial has been running on the Synthetix Perps OP program. It was like a 20-week program launched in the spring. I think it's been a huge success for Synthetix Perps. It's notably been a success with Polynomial. How do you keep growing Polynomial without those OP rewards?
I mean, like, that's a good question, right? Like, currently there is a lot of like people who are trading because it's kind of like to trade, right? And that offsets the price. Cause like the way we think about it is like when you're trading perps on chain, right? You make some compromises. One is on latency, right? Like still slower, and the other one is like gas and stuff like that, right? Like you want to place a trade, it costs like $2-3. Even if you place like a very small trade, it costs like $4. And if you make like a very big trade, it will still cost $4 plus the fee. I'm talking about the base thing, the gas. So that essentially like is the big barrier, right? So we wanted to make sure like those things are like much better. And the fees, we wanted to be more competitive. Right now it's 2 and 6. We think like it will get like lower and lower with time as the volumes increase, right? So currently, like the main thing is that it's more like we were on a building spree to acquire users, to bringing like a bunch of people to try out our platform, see if it's a good option. And we think like in the future, like they tried it, and currently if you look at perps on chain, at least we have the amount of lowest fees and then more assets. I think that is what people care about the most, at least from a perps exchange perspective. And I think that will like make them stay. And I think in the future, like we have reward programs and stuff like that, OP and things are like there more or less. So that will be there, but it's more like you can't like always keep on like giving rewards and getting users. So long term, we want to reach the feature parity and build stuff so that people don't feel like they're making a compromise and the compromise is offloaded by the OP government. So I think it's something like that will happen, but it will take a bit more time. But currently, the bigger focus is on integrating Perps v3, which is basically the next version of the Synthetix Perps, and it has few features which are very quite interesting. One of them is that you can now like use ETH as collateral and trade, and also like there is like native cross margin. Currently, what is there is like a quirky way of doing cross margin, but there is like native cross margin, so you can have like multiple percent at the same time, and they all share the margin. So those kind of things are there, and that would like drive more users, I think, because it's getting more and more feature parity with the centralized exchanges. So that would be good, I guess.
You mentioned earlier that you've been building features to optimize for whales or just pro users, or however you want to classify them. And I had noticed this prior to the interview, just that, Polynomial's been running these trading competitions, which look to target larger traders. And for this week, it's there's a 5,000 OP. So that's 5,000 OP tokens. And then the competition rules are a trader must complete a minimum of 100,000 US dollars in trading volume. I guess, what can you share about that?
So we when we started Polynomial Trade, we started doing some marketing experiments. So what we thought was giving out some NFTs for traders, and then we did some trading competitions and all that kind of stuff. And we realized we clubbed all of them together and made this thing called the trading season. A trading season is a 2-month long program where a person starts on level 0 and they gain XP every time they trade. And when they trade, they collect NFTs. So we wanted to see who are very loyal and who keep on trading. And when you reach a certain level, the advantages are 2. One is that the amount of OP rewards you get a boost on it. So Synthetix is running this huge OP rewards weekly, 300k OP. So we give a boost on top of it. For example, you are level 4, I think you get 10% boost. Level 5, 15. Level 6, 20, and level 7, 30% boost on top of the OP. So the main thing is the more you trade, the more XP you gain, and XP is more made in a way that if you make profits, you get more XP. Those kind of things are there. And then what we do is we do weekly trading competition. So every level we make them trade against each other, so that a whale trading against a small trader, it's not a fair thing. People who trade between who trade let's say 100k and above, they all are in a single competition with between 100k and 1.
Gautham, you're notably, I think, one of the few, if not the only, Synthetix Perps front ends that doesn't have a token yet. I'm curious, why no token, and is there any plans to launch a token? And then, I guess, how do you grow without token incentives?
So currently we are growing with OP incentives. We are borrowing someone else's token, and borrowish. We're not very sure, but still we are still on the building phase, and there is a lot more things to be done. We think Perps have a much bigger way. So I think currently we do a few $100 million, and I think few billions and many more things have to become. And so let's see.
What's really interesting here is we have other models to learn from. We admire the success of GMX, and we had the chance, Nomadic and I got to interview Seb from Gains or G-Trade. We've gotten to talk with Andrew from Quenta. And so there's pros and cons to a token. And what I'm excited for is the fact that there's actually lots of peers with similar models to kind of learn from, to see how might a token be integral to a protocol like this that is focused on building, the top DeFi derivatives on chain. Well, guys, this is a great place for us to start to wrap up. So I want to remind our listeners that they should first learn more about Polynomial Protocol by going to polynomial.fi. Second, they should follow Polynomial.fi. We'll show the exact handle there on screen. On Twitter, you can follow Gautham on his Twitter account there. It's Gautham with 3 Z's, Z as in zebra at the very end. And so we've previously covered Quenta, and we're hoping for folks that may have not heard about Polynomial that they'll discover that it's just got a killer user experience in terms of DeFi Perps trading. But want to allow you then to just share what's the next big milestone or bit of alpha that we can look forward to from Polynomial.
Thank you, everyone. Thank you for having the time. Do check out about Polynomial at polynomial.fi, or join our Discord. We have a great community over there. If you have any questions, just hit it up over there, and we'll reply as soon as possible. So what we are focusing on at the moment is an upgrade to the whole system with Perps v3 from Synthetix. So you have we'll go as many things as possible, and we'll be integrating much better UX, for example, a single click trading and many more things.
Thanks everyone for tuning in. If you're a talented founder or developer, please consider reaching out to our team at fourthrevolution.capital. And for future episodes of The Edge podcast, please check out our link tree at edge_pod.